Dealers, stackers, everyone's getting out. The days of silver bullion are over. In this video, I'm going to show you that the endeavor to stack this metal has completely changed. If you got into stacking silver 2 years ago, 5 years ago, all of that is completely different now because the way people are getting silver is not what it was even that short period of time ago. Typically, stackers would walk into a local coin shop and they would pick up 2 rounds a week, 3 rounds if they could, and they would accumulate at least 20 and fill these tubes, right? That's many people during the pandemic, they jumped in on this, and even 2 years ago, and certainly 1 year ago, when we got this big $10 jump in silver, we had a lot of new stackers jump in. But it's completely changed now. First, dealers don't even need stackers to walk in the door anymore. Yes, you heard that right. They don't even need us to walk in the door, because what dealers are doing is they're looking at the silver to gold ratio at this wide spread. Presently, at the time of this recording, it's 101 of these ounces. I'm not even showing you, I'm showing you about 60 ounces on your screen. They can get 101 ounces of silver for 1 ounce of gold. They could walk in to a wholesaler, your dealer, and they could swap out 1 ounce of gold, here's 1 ounce, and they could get 101 ounces of silver. Here's the kicker. When they do that, they don't pay a premium for each ounce. So when stackers do buy silver from a local coin shop, local dealer, the dealer is getting all of that premium in pocket. So they don't even need stackers to come in and sell them silver anymore, your local dealer. With this wide spread of a silver to gold ratio, it's perfect for your local dealer. They're getting silver by using that ratio. And really, you and I, really, we should be doing the same thing. That's exactly what we should be doing. And for stackers, we're not even buying. It's been almost a full year that silver is just stuck at this $32, $33 range. It's a long-term performance lag for silver, and many feel that silver is dead, so they just stopped. They're not even buying. Sovereign, here's a maple, generic rounds, right? Here's a buffalo. They're not even buying. They're just sitting on the sidelines. And really, what we thought would happen is we thought that dealers would just have to shut their doors because stackers weren't coming in. But that's not what's happening. This is what I'm telling you. Dealers are using gold, even a generic 1 ounce. This is a generic 1 ounce bar. They'll take an ounce of gold at this wide silver to gold ratio, and they'll get all that silver. So we need to start smartening up. We need to start acting like dealers are acting and use this silver to gold ratio in our favor. I'm going to show you in charts the breakout moment for gold. The bull market for gold in the 1970s showed 200 all-time highs for gold. The 2000s bull market showed just over 100 all-time highs. The present bull market has only seen 74 new all-time highs so far, while gold's spot price has seen a collective 180 new all-time highs in the past 25 years and has more than 10x'd for a century-to-date appreciation of, listen to this number, 1,233%. 1,233% from February 2001's low of a $255 spot price. The same cannot be said about the companies that explore for gold, though. The companies that develop projects, that operate the mines. The gold mine industry has faced a critical crisis over the past 15 years. From 2010 to 2025, exploration budgets have stagnated or declined. Discoveries have plummeted. Between 1990 and 2023, 350 deposits containing 2.9 billion ounces were found, but only 29 occurred post-2010, with no major discoveries since 2016. Did you hear that? No major discoveries since 2016. Global gold production has stagnated, with projections of a 17% supply drop by 2030. This is truly a precious metal. Existing mines are depleting faster than reserves are replenished. This underinvestment in new deposits is such a huge, momentous driver for a likely supply crunch. Mines are depleting, it's a fact. No major new discoveries, that's another fact. The last major bull market for gold-related companies occurred more than 13 years ago. Now, while gold has appreciated by 75% from 2011, while that's happened, the GDXJ index has depreciated by 63%. These are very key numbers. Just this past month, legendary hedge fund manager John Paulson agreed to acquire 50% of the undeveloped Donlin gold deposit in Alaska for $1 billion. This is the best time, in my opinion, this is the best time to be looking at companies that own large, known deposits of gold in prime jurisdictions. The setup is just gorgeous. Everything I just laid out brings me to today's sponsor, Axcap Ventures. Their ticker's on your screen. It's USGARLF. Yes, Axcap Ventures. That's the company whose insiders are buying stock in recent weeks. Check this out. I'll show you. Axcap was incorporated to make investments to rapidly capitalize on the distressed conditions of the gold industry. The management assumes that their assets, which are comprised of 5.57 million ounces of gold equivalent resources, that is a massive number, 5.57 million ounces of gold equivalent resources in the measured and indicated category, and an additional 0.5 million ounces inferred. They're valued, listen to this, they're valued around $5 an ounce. Keep that in your mind. $5 an ounce, because peers are trading for 8x as much, or 700%. 700% more. And it could be re-rated. You heard that right. Start researching Axcap Ventures. There's case studies of previous instances in which similar situations have led to meaningful appreciation. Axcap Ventures, flagship Converse project in Nevada's Battle Mountain Trend. It's a premier gold jurisdiction producing 75% of the United States gold. It's a standout. It's a true standout. The project's October 2024 mineral resource estimate reports 5.57 million ounces of measured and indicated gold and 0.42 million ounces inferred, with a drill program launched in March of 2025. This is happening now. Look at this. Insider purchases totaling 1.2 million in the first quarter of 25. These are insider purchases. It's really strong management confidence. Listen to this. Here's a great example. Just listen how strong they're going in. On May 1st of 2025, Mario Vetro, co-founder and director, purchased 20,000 shares. On top of that, Tyron Breitenbach, the second co-founder and director, purchased 50,000. The day before that, Mario purchased 10,000. The day after that, 15,000 shares. On April 28th, he purchased 25,000. On the 25th, he purchased 110,000. On the 24th, he purchased 60,000 shares at 15 cents Canadian. Collectively, a total of 240,000 shares just in the last week of April. That's exciting. This is why I'm so excited about this company. The team assembled to run Axcap have been involved in the discovery of over 20 million ounces of gold with previous endeavors. Here's the value proposition. Advanced gold deposits are trading anywhere from $40 to $60 per ounce. Axcap Ventures is trading at $5 an ounce. That's the part that excites me. The company is cashed up with $10 million. Peers trade at $49 an ounce on average, while Axcap Venture markets, the market cap translates to only $5 an ounce. You can tell I'm excited about this. Research Axcap Ventures. There's a link in the description below. Perform your own due diligence. I really think you're going to be as excited as I am. Click that link and check them out.